This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, on this Friday, October 10th, 2025. It is Bloomberg Businessweek Daily, live from the Bloomberg Businessweek studio at Bloomberg headquarters in Midtown Manhattan. It is Bloomberg Businessweek Daily. That is not Carol Massar. That is Emily Graffeo. She's from the Bloomberg News cross-asset team. I'm Tim Stenovec. Emily in for Carol. And it is a day, Emily, where we are going cross-asset.
Exactly. You look at investors piling into bonds, leaving Bitcoin, leaving stocks. We'll have a lot to talk about. We're also going to talk about eco as well. Bloomberg TV and radio, international economics and policy correspondent Mike McKee is going to join us very soon on tariffs, federal layoffs, Argentina, and more, Tim.
Jayati Bharadwaj joining us as well from TD Securities on FX. And then we are going to the Middle East. There's a lot that investors and pretty much everyone around the world is keeping their eye on. Dana Stroul is going to be joining us. She's Senior Fellow of Director of Research at the Washington Institute for Near East Policy.
And finally, the CFO of the publicly traded telecom company, Lumen Technologies, joins us soon.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. But back to those markets, and here he is, Charlie Pellet.
Thank you very much, Tim and Emily. Indeed, lots going on. We got you covered. Going to be very interesting to see how things shake out at 4 o'clock when markets close here in the U.S. Right now, though, losses across the board with the Dow, the S&P, NASDAQ all slumping. A months-long calm on Wall Street screeched to a halt today when stocks erased early gains to touch session lows after President Trump threatened, quote, a massive increase of tariffs on Chinese products imported into the United States. So here's where we stand right now. Again, 2 hours to go ahead of the close. S&P down 1.8% at 6612. The Dow down 575, down 1.2%. The NASDAQ Composite Index down 580 right now. That is a drop of 2.5%. The Russell 2000 Index of small cap shares down 2%. Our Mag 7 Index is hit hard, down 2.7%. The 10-year at 4.05% with the 2-year currently yielding 3.52%. Spot gold is trading higher. Spot gold up 0.3%, $39.87 the ounce, but remains below 4,000. Silver above 50.09 right now, up by about 1.6%. And West Texas Intermediate crude down 4.3%, 58.86 for a barrel of WTI, and Bitcoin down 3%, 117,566. Sources tell Bloomberg AstraZeneca is expected to announce a deal with President Trump to slash drug prices. The president does have an event scheduled for 5 p.m. Wall Street time. We'll take you there as it all comes down. Right now, we do have shares of AstraZeneca. They are trading lower, down 0.3%. Again, recapping, stocks lower, S&P down 1.8%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. As Charlie mentioned, the S&P 500 down about 1.9% off the worst levels of the day, down as much as 2% earlier in the session. I want to bring in Eric Weiner. He's senior editor, Equities Americas for Bloomberg News. He joins us here in the studio. Eric, when you are on our program, more often than not, it's because we're seeing volatility. Today, no exception. The reason we saw stocks move lower is over concerns of an escalating trade war with China. How is today different than, I don't know, rhetoric that we've seen in the past few months?
Well, China is really sort of the tip of the missile on the tariff fears. So when the president said we are, going to massively raise tariffs on China and basically, unspooled this whole thing about rare earths, we knew immediately that the market was going to turn and it would probably get pretty ugly. So the question becomes what this actually means. If you look at where the market was, it was pretty toppy. Things were already getting to the point where people were on Wall Street were kind of wondering how much further it could go. So this is a good opportunity to step in and be like, okay, well, let's pull some stuff off the table. Let's see what happens over the weekend and go from there. The question is where we go at the end of this trading session and then next week. Because if this continues and it sticks around, things can get ugly.
Talk about the nature of the sell-off that we're seeing right now. We have tech stocks moving lower. The most risk on parts of the market seem to be selling off in the worst way today. What does that tell us about just where we could go next?
Well, when you see the index move like this, when you see the S&P 500 move like this, even though, yes, there are 400 stocks that are down, there are about 15 that you're really looking at because the thing is so concentrated. So the risk is in those big tech names that really, really drove the equity index much higher. When you look at it, you're like, okay, we'll take some profits out of Facebook, we'll take some profits out of, or Meta, we'll take some profits out of Nvidia and go from there. But it's like when you saw the VIX jump over 20, that's when traders start getting cautious generally. So there are two things going on. It's the breadth of the decline and then also these big names coming out.
But are we seeing a significant rethinking of valuations right now? Because we're only off 2% of all-time highs. It's the worst day for the S&P 500 since April 21st. But if you actually look at what level we're at right now, it's the lowest that it's been since September 25th. So we're basically going back in time, 2 weeks.
Yeah, it's exactly. We're back to where we were in,
late September,
way back
was
then.
a record then too.
And that's what I mean by we don't really know anything right now. When you talk about we're going to massively increase tariffs on Chinese goods, what exactly does that mean? Who gets hit? It's not there isn't a lot of discerning trading going on. It's just let's get out of these positions, and it's a good excuse to kind of what they call take profits. But in terms of the actual risk and what's going on, we haven't had a 2% drop. The market has been incredibly calm. We haven't had a 2% drop, as you said, since April. We haven't had a 1% drop since August 1st. So this is one of those situations where why not get out of here right now and sort of see where we come back next week? Because the market has bought every dip. That's what we're kind of betting on from here, is that investors will step in and be like, okay, well, there was a sale. Let's pick it. Let's scoop stuff up starting on Monday.
What would you need to see in the market to say that this is not going to be another dip that's going to be bought? Would it be, more declines Monday, Tuesday, Wednesday? Would it be a certain sector selling off? What would really generate some concerns here that the rally is not going to be sustained?
When you start seeing it become really broad-based. So, we look at two measures of the S&P 500. You look at the S&P 500 equal weight, and you look at the S&P 500 regular. The equal weighted version means that there's a lot more breadth in there. You can sort of see what's going on. Right now, the S&P 500 is performing way worse than the equal weighted version of that. And that will flip. If that gets ugly, if the S&P 500, if the equal weighted version comes down with the regular version, then you start thinking, wow, and it starts holding, because we need to sort of see it happen for a couple of weeks for this to go on. Then you start thinking, well, maybe we're actually getting some repricing, but we aren't seeing that. I really want to stress, we are not seeing that right now.
Eric Weiner, thanks so much for joining us. Senior Editor, Equities Americas for Bloomberg News, joining us here in the Bloomberg Businessweek studio. Eric, don't go far. We might be calling you back a little later today. I do want to bring in Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent. He joins us also here in the Bloomberg Businessweek studio. As we've been talking about, Mike, markets lower on fears of an escalating trade war. You're a macro guy. You're International Economics and Policy Correspondent. Is this a rethink of U.S. of U.S. policy, U.S. trade policy? It's just a social media post.
Yeah, I think, there's a couple things going on, and I think Eric's right that the markets are using this as an excuse to sell off, because we don't know exactly what's going to happen. The Chinese have said that they're going to put new restrictions on rare earths and super magnets and things like that that have been under discussion. And Xi and Trump are supposed to meet at APEC later this month and talk about this, and there was thought that they might reach some kind of deal. Some analysts think that this is basically the Chinese trying to get some negotiating leverage. And Trump doesn't want to be backed into a corner, so he's negotiating back in the kind of language that he tends to use. The Chinese, the main body of the Chinese new restrictions wouldn't hit till November or December. So it's not something that's imminent, and it could be that this is just all posturing, and one has to hope that at this point. But that may be why we've got a 2% fall, or roughly 2% fall, and nothing worse. I think if the president had really come out and said, I'm going to jack up these tariffs to 50, 60, 70%, then you would see a much bigger reaction.
These comments, of course, are coming before he's set to meet with Chinese President Xi Jinping a little bit later this month. Have we heard any details about whether that meeting is still going to be taking place in the wake of the social media posts?
Well, we haven't heard that it's off. The Chinese did not mention it's off, and the president said, I don't see any reason to meet right now, but he didn't say I'm not going to. So at this point, I think we just have to wait and see how this plays out over the next couple of days. Maybe he gets it off. Maybe he's mad because of the Nobel Prize, and instead of going after Norway, which we all thought he'd do this morning, he's just taking it out on China for the time being.
But he was thanked by the winner of the Nobel Peace Prize.
Well, yeah.
And then he reposted this.
Yes. Basically, she said, we're counting on President Trump and our friends in democracies around the world to continue the struggle for Venezuela. She didn't say, thank you, President Trump, exactly.
Well, let's shift gears a little bit, Mike, and talk about reductions in force, the idea of layoffs, permanent layoffs. Russ Vought earlier today, White House budget director, saying the reductions in workforce have begun. He's referring to the federal government's term for layoffs here. Do we know how many? Do we know who? Do we know where?
What we know is that the White House, senior White House officials told Bloomberg News that it would be thousands. Representative of the American Federation of State, Local, and Government Employees said that they heard 1,300. But there's no exact number at this point. It does seem to be affecting many agencies. I've heard as many as 9. And this is obviously going to provoke lawsuits from the federal unions. The administration and Vought say this is necessary because of the government shutdown, but it's not. They've never done this before.
Yeah, why
the workers aren't being paid right now, so it doesn't. It's just. It's also theater. Now, does the administration? They could be setting this up as a bargaining chip. You know, Democrats come to the table and they concede something, and the president says, "All right, we won't fire these people." Because remember how this went with the Doge thing. People were on the payroll, off the payroll, on the payroll again. So this could also be a big smokescreen.
I'm wondering how you think that kind of impacts what could be an already weak labor market that we're seeing. We had Governor Christopher Waller from the Fed saying job growth has been negative for the last few months. The labor market is his biggest concern. Of course, that's what we've also heard from Jerome Powell. These firings, wouldn't that make the labor market even weaker, or is it not quite related?
There's not enough people getting fired. I mean, it's terrible for them individually, but at this point, if you said thousands, I mean, there are something like 2 million federal employees, so it wouldn't mean that many people are going to affect the economy, but it does contribute to the overall sense that the country is not doing well, that the economy is not doing well, and that may hit consumer confidence. And the more layoffs you have in your neighborhood, the more you start to worry about yourself, and then you cut back on spending, and that's how recessions begin, basically, is a confidence matter. So it's not good news in that sense, but it's not something that we will really see in the economy. What ends up happening with government shutdowns is spending is delayed, but it's not completely gone. People will get their back pay, in theory. The administration's threatened that too, but the law says they get paid, and then they'll go make the important payments that they have to make. And I'm sure they'll use their charge cards for groceries and things like that in the meantime.
Well, speaking of getting paid, Argentina is about to get paid to the tune of $20 billion. Is it fair to call this a bailout?
It's fair to call it a bailout, but they're not really going to get $20 billion from the U.S. Essentially, they're calling it a swap line, which it isn't exactly either. The swap line is an agreement between two central banks, one that needs dollars, sends money to the Fed, and the Fed sends the equivalent amount in dollars to them so that their companies in that country can pay their dollar denominated bills, and then they send it back. And when the crisis is over and the Fed sends them back their money. This is more like a rescue package along the lines of what happened with Mexico in 1994, where the U.S. used the Exchange Stabilization Fund and agreed to guarantee Mexican bonds that couldn't be sold because there was a concern about whether or not they would default. And so the U.S. guaranteed those. The U.S. bought some of the assets. They didn't give Mexico cash directly. And I don't think we're giving Argentina cash directly, but it'll be a system set up like that.
Is it a little different than Mexico back then, though, because we share a border with Mexico? The stability of Mexico is in our best interest because it's such a large trading partner, at least right now. I mean, Argentina is a little bit of a different story. It seems more political.
Well, there's definitely a political angle to it, and it just kind of depends on what your cynicism meter goes up to. Argentina is obviously a poster child for bad financial management. They owe the IMF billions and billions of dollars. They've defaulted something like 23 times. And you could argue that it could be a sort of economic domino in the way we saw things happen in the Asian financial crisis. But there's also the idea that a lot of the hedge funds that hedge fund leaders who worked with Scott Bessent over the years have loaded up on Argentine debt, distressed debt, because they can buy it at a discount. And if the Argentine peso keeps falling as it has and is predicted to do if they lose the congressional elections coming up, then these people lose a lot of money. And if the U.S. can prop up the peso, then it helps Bessent's friends. Now, I don't have any evidence one way or another, but the New York Times is reporting this. Paul Krugman did a column on it today. So that is something for, I don't think you have to go as far as a tinfoil hat. Maybe saran wrap hat or something like that that could be.
Maybe it's in the same drawer where you would find the tinfoil.
Well, and you get in these situations, you get people who are nervous about the impact on American investors and funds. We saw the same thing happen with Greece, and Greece was definitely going to default, but it was handled very gingerly so that it didn't cause systemic problems.
Well, this coming from the Treasury Department, but certainly the next Fed chair might be thinking about the implications of this. And that's kind of where we want to end with you, Mike. We learned earlier today some other names that could be in the running or are in the running for Fed chair finalists. Rick Rieder, Michelle Bowman, Chris Waller, Kevin Warsh, Kevin Hassett. What's the timeline here? Is there anyone else to add?
This is a CNBC report that they are the final five.
Okay.
And that they would do another round of interviews, and then sometime maybe in December, the president would nominate someone to the Stephen Myron seat where the term expires at the end of January. And that person would be essentially the de facto Fed chair in waiting. And then if Jay Powell resigns, they could put Steve Myron back in that seat or somebody else. We don't have any other outside confirmation of that, but it certainly tracks with what the president has been saying. He's called the Kevins and Chris Waller the finalists for some time. Michelle Bowman might be a little bit of a DEI here because we know they like her in the regulatory role that she's in, and Rick Rieder obviously has a good reputation in the markets. It depends on what the president ultimately ends up wanting in a Fed chair. How much of a splash does he want to make in a sense of a rock falling in the pond and sending out ripple? How much does he want to upset the apple cart, and how much can he do without upsetting the markets? So this is going to be something to watch over the next couple of weeks, because once we get to an announcement, there's going to be a lot of reaction to that as well.
Well, we'll certainly be talking to you many times between now and then. Michael McKee, Bloomberg News international economics and policy correspondent, joining us here in the Bloomberg Businessweek studio. Mike, have a good weekend. The S&P 500 still down to the tune of 1.8%. The NASDAQ Composite down 2.5%. The Dow down 1.3%. We're kind of going all over the place geographically right now because investors have a lot to think about. Observers have a lot to think about. including the durability of lasting peace in the Middle East. Israel began the process of withdrawing troops from Gaza, while the U.S. started the clock on a 72-hour window for Hamas to release all remaining hostages as the complex process of ending the 2-year war got underway. Dana Stroul is Senior Fellow and Director of Research at the Washington Institute for Near East Policy. She joins us now from Washington, D.C. Dana, good to have you on the program today. Is this the beginning of lasting peace in the region?
Doubtful, but it could bring relief for Israelis and Palestinians. So what we're going to see over the next 72 hours is just the initial phase of this pretty extensive, very broad 20-point plan. So we'll see Israeli hostages hopefully released within the next 72 hours. We'll see Palestinian prisoners released from Israeli jails. We'll see the IDF withdraw out of to part of Gaza, but they're still going to be present in more than 50% of Gaza. And we'll see a lot of humanitarian aid flow in. But that doesn't address Hamas's weapons. It doesn't address what the constitution of an international stabilization force on the ground in Gaza will be. It doesn't address what the future governance structure will be. It doesn't necessarily put us on a path to Palestinian statehood. And of course, it doesn't address everything else that's keeping us from having peace in the Middle East, like Iran's nuclear weapons program and other terrorists who still have ballistic missiles and they're firing them.
Right. So a lot of outstanding questions, but talk about the current deal so far. What makes this ceasefire and this hostage deal different from just previous efforts for peace that we've seen between Israel and Hamas?
What's really unique about this time is the convergence of stakeholders who all decided to pressure all sides. So for the past several ceasefire negotiations with respect to Hamas and Israel, the United States was working with Qatar and with Egypt, who were then mediating with Hamas, and the United States was working with Israel. But this time, President Trump started at the UN, bringing Arab and Muslim leaders together all to back his plan. And then we saw in these high stakes negotiations in Egypt, Turkey join hands with Qatar and Egypt, all putting tremendous pressure on Hamas. And finally, we have the personal investment and commitment of President Trump, who backed Israel, but then at the final hour, told Hamas, I will guarantee that Israel will not restart this war if you uphold your commitments.
Now that that 72-hour window has begun, what is the U.S.'s role in enforcing the ceasefire?
Well, first of all, it's whether or not President Trump is going to stay personally invested and that level of presidential interest and commitment. And secondly, is the U.S. military role. So CENTCOM, the head of U.S. military operations in the Middle East, has announced that they'll contribute to this joint task force to support hostage recovery. And the U.S. military will probably have a significant leadership role in standing up this post-war stabilization mission in Gaza and bringing others in.
I'm wondering about the significance of certain people involved here, especially on the American side. Steve Witkoff, for example, Jared Kushner, for example, who doesn't have the same role that he had in the White House during the president's first administration.
Well, Jared Kushner has not had an official role in the second Trump administration, but I think it's fair to say he's been in the background the whole time, and you can really see his fingerprints on this 20-point plan. Kushner has always been a real advocate of economics, trade as part of a path to peace. There's a lot of economic angles to the 20-point plan, and he clearly was sitting alongside Steve Witkoff in Egypt and now in Israel to see the details of this followed through.
What's the right way to think about what happens in Gaza if there is lasting peace, the power vacuum, who actually comes to power there, and what their views will be?
That's really TBD. But here's the risk. We get through this initial phase of the ceasefire and there's a security vacuum and there's nobody there on the ground other than Hamas, who still has their weapons, or Israel, who's still present in 50% of the Strip. What President Trump would like to see happen is this international multilateral force with a lot of Arab and Muslim countries contributing, Really hard to see them going in if Hamas doesn't agree to give up their weapons. And I think the leaders of Hamas understand that if all 20 points of this plan are implemented, that means surrender for Hamas. They have to commit to peaceful coexistence with Israel. Hard to see a terrorist organization doing that. And if they leave, then they're surrendering everything that they've worked all these decades to build up. So the likelihood is actually more instability and more violence in the short term. The hope is that if this peace plan is implemented, we actually have a chance at Palestinian self-determination in Gaza and also in the West Bank.
You noted that Hamas accepted this deal under military and international pressure. I'm wondering what kind of lessons we learn from that. Does this mean that more pressure needs to be applied in order to reach the next stage of a deal that could lead to lasting peace?
Well, the Israeli operations in Gaza have received so much international and regional condemnation and criticism. But I think we have to be honest here that we wouldn't be where we are today without some of the Israeli actions in Gaza, which took out all of Hamas's top leadership, have dismantled a lot of those tunnels, and we're continuing despite all of this international criticism. But it's clear that it's not only military pressure alone, it's this political pressure from the longtime backers of Hamas. So exactly 2 years after October 7th, what's clear is that Egypt didn't want a flood of Palestinians from Gaza coming into the Sinai. Qatar wanted it to be over, especially after that Israeli strike in Doha that targeted Hamas leadership sitting in a fancy building. And Turkey, who has a longtime connections to Hamas, President Erdogan's top national security aide was on the ground in Egypt negotiating this. So the backers of Hamas really pressured it to agree to give up these hostages.
Dana, always appreciate you taking the time and joining us, especially on such a busy Friday. Dana Stroul, Senior Fellow and Director of Research at the Washington Institute for Near East Policy, joining us from Washington, D.C. Coming up in just a minute, we're going to be speaking with the CFO of the publicly traded communications company Lumen Technologies. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, I thank you very much, Tim and Emily. Here's what's going on. Very close to session lows right now on the S&P 500 index. We're on track for a losing week. Right now, looking at a loss of 1.5% on the week. But right now, we have got the Dow, the S&P, NASDAQ. They're all in the red. A months-long calm on Wall Street came to an end today when stocks erased early gains after President Trump threatened, quote, a massive increase of tariffs on Chinese products imported into the U.S. Stocks started selling off around 10:55 a.m. Wall Street time. S&P now lower by 1.7%, again close to session lows, down 112. The Dow down 515, drop there of just about 1.1%. NASDAQ is down 2.3%. Our Mag 7 index down 2.5%. The 10-year 4.04%, with the 2-year that's currently yielding 3.51%. Gold 4,007, advancing $30 the ounce, up by about 0.8%. And we've got silver back above 50, 26 the ounce, up by 2%. Johnson & Johnson is in talks to purchase Protagonist Therapeutics. That, according to the Wall Street Journal, citing sources. J&J down 0.5%. It reports earnings next week. Protagonist up now by 33%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. It is time for another edition of the CFO Briefing. This week, we are joined by Chris Stansbury, Chief Financial Officer and EVP of the Louisiana-based publicly traded global communication services company Lumen Technologies. Market cap of about $6.8 billion. Shares so far this year up more than 25%. Also with us here in the studio is Nina Trentman, Bloomberg News Senior Editor. She writes the CFO Briefing newsletter. You can subscribe to it at bloomberg.com/CFO-briefing. Chris is featured in the most recent edition of the newsletter. Chris joins us from Denver. Chris, welcome. The company divesting non-core assets, for example, earlier this year announcing the sale of its mass market residential fiber unit to AT&T for $5.75 billion in cash. Now, what you're planning to do is leasing existing fiber routes to hyperscalers and social media companies to transport AI traffic between data centers. I want to know, how big of an opportunity is it to lease to these hyperscalers?
Yeah, thanks for having me today. It's been quite a journey at Lumen over the last 3.5 years. And really what we see as an opportunity and have seen really through our transformation is the AI multi-cloud world that's being developed right now. The network of yesterday wasn't built to support it. And if you really think about the economics of AI and the economics of a GPU, you want to keep that GPU fed as much as it can consume so that they're spinning constantly, and that's where you get the economic benefit. So the problem with the network that has existed so far is that as those data loads get spread further and further away, as data centers are in search of power and cooler temperatures, there's latency problems and there's access problems. It takes a long time for networking to adjust. So what we're doing is building a mesh that basically goes anywhere to anywhere, where the customer on demand can move those workloads where they need them in super low latency manner. So that's the big change. And so it's not just hyperscalers, it's really the full connectivity between the hyperscalers running those clouds, the hyperscalers obviously building those AI algorithms, and large enterprise customers who are on the AI journey now and will be using it much more heavily in the future.
Chris, thanks for joining us again. It's great to chat. Just wondering, with the AT&T deal and also what you've done in capital markets in recent weeks, you've really improved your financing structure. You're saving hundreds of millions in interest expenses a year. Talk to us a little bit about that.
Yeah, if you go back in time when we all joined Lumen and saw this opportunity, the balance sheet was not our friend. We had a lot of debt. Half that debt was due in 1 year. It was due in 2027. And that was job number one. We really needed to strengthen the foundation of the company so that we could go do the things that we're executing against today. So that was really accomplished through a couple of things. One is we did the largest out-of-court debt restructuring in history. That's not quite 2 years ago. And that allowed us to push those maturities out a bit, but at a significant expense. Our annualized interest expense at that point was about $1.4 billion. But from there, we saw in the middle of those negotiations, we saw this opportunity with the hyperscalers. And soon after that debt negotiation was completed, we signed $8 billion worth of deals, and that has grown since. That allowed us to monetize an asset that has been in the ground for 25 years, which is conduit that we can blow fiber through to meet the needs of the hyperscalers in a fairly short period of time versus building new. And that's really the core enduring advantage of this business. And then we layer the digital on top of that. But the cash from those deals allowed us to refinance and delever. So we've made a number of moves so far this year. And with the sale of the consumer fiber business to AT&T, when that closes, our debt will be down to just over $13 billion, and our interest expense on an annualized basis will be about $700 million. So in a 2-year period, dramatically reshaping both the quantum of debt as well as the maturity curve. And now that balance sheet is a real asset for us as we invest in the AI multi-cloud world.
Yeah, I'm actually wondering about the investments. Of course, there's a lot of capex that's required in a business like yours. We've seen earlier this year the One Big Beautiful Bill Act that was passed, which tries to encourage investment, including in capital investments, by allowing you as CFO to depreciate certain investments faster. Like, do you think this will make an impact as you're thinking about future investments in your business here in the U.S.?
Definitely. If you go back to the 2017 legislation, that the big problem with that legislation is it created an unequal playing field between, say, more service-oriented or asset-light companies and asset-heavy or infrastructure companies. And if you look at where the administration is focused today, it's clearly around infrastructure. That's where I think the U.S. has the biggest challenges. Really, is making sure that we don't get too far behind with our infrastructure. So the recent legislation has leveled that playing field. And really that was around two things. The first is that there was interest deductibility limits that used to exist that have been relaxed dramatically because, again, asset-heavy infrastructure companies tend to have higher leverage. And then, to your point, the ability to accelerate depreciation to help on the tax side is significant. That reduces the risk that companies that are investing in infrastructure take on when they make those kinds of investments. So it's absolutely an opportunity for us.
Chris, gonna have to leave it there, but you got to come back and join us once again. And I do remind everybody that Chris is featured in the most recent edition of the CFO Briefing newsletter. You can sign up for it at bloomberg.com/CFO-briefing. We've been speaking with Chris Stansbury, CFO and EVP of Lumen Technologies. Also joining us here in the studio, Nina Trentman, Bloomberg News senior editor. Sign up for that CFO Briefing newsletter. After an exciting week of Hollywood coverage with Screen Time, take another deep dive into the film industry with a brand new episode of Bloomberg Chief Future Officer. This one features IMAX CFO Natasha Fernandez. Tune into Bloomberg TV Wednesday at 9:30 Wall Street time. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index holding just above 6,600. We're very close to session lows. The Dow, the S&P, NASDAQ, they're all in the red. A 600-point drop right now on the Dow, down 1.3%. S&P is down 1.9%, down 127 points. NASDAQ down 585, drop there of 2.5%. A months-long calm on Wall Street came to a screeching halt today when stocks erased early gains to touch session lows after President Trump threatened, quote, a massive increase of tariffs on Chinese products. Right now, we have got, again, the S&P down 1.9%, the Russell 2000 index of small cap shares down 2.1%, and our Mag 7 index is down now by 2.8%. The 10-year at 4.04% with a 2-year that's currently yielding 3.51%. Gold is up $18 the ounce, was back above 4,000 briefly, right now at $39.96, up 0.5%. Silver also was back above 50 briefly, $49.91 right now on silver, up by 1.3%. A big retreat for West Texas Intermediate crude below $59 a barrel, $58.85, down 4.3%, and Bitcoin showing a 3% decline at 117,519. Automaker Stellantis' third quarter shipments climbed 13%, led by a rise in North America, pointing to a recovery after the ailing car maker worked down inventory in the United States. Automakers lower, Stellantis down now by 6.6%, Ford down 0.5%, GM down 0.6%, and Tesla down by 3.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. I mentioned we are all over markets today. Dollar sliding as President Trump threatens a, quote, massive increase in tariffs on Chinese goods. Well, the greenback is still trading on the cusp of its best week of the year. The president's latest tariff salvo threatening a once promising dollar rally. We've got with us Jayati Bharadwaj, Director of FX Strategy at TD Securities. She joins us here in the Bloomberg Businessweek studio. Jayati, we wanted to talk FX. We knew you were the right person to talk to. We've seen the dollar recover a bit this month until today. Is this a temporary setback or is it something bigger?
Thank you so much for having me again. Always a pleasure to come talk to you guys. I would say that, interestingly, what's been happening in the last few sessions, at least, is that we were living in sort of like a U.S. nirvana where we don't know where we're flying. We're flying blind. We don't know what the U.S. data is indicating anymore. And the hyper focus that markets had on path of Fed cuts, how much is the Fed going to cut? How much are they going to, ease next year? We took a break from that thanks to getting no U.S. data, and immediately market focus shifted to everything that's happening elsewhere in the world, which is where you had elections in Japan did not turn out the way markets were expecting. You had French election uncertainty drag on. All of this sort of allowed the dollar to behave like a safe haven again, something you saw only up until last year. So that sort of gave dollar the kind of strength it has been used for the last 5 years and gave dollar that nice rally. I think you bring a very good question. Does that change the picture meaningfully, or is it just a bounce? That's a question that clients have been asking us as well. But I think big picture, it's unlikely that euro is going to collapse to the level where we were at the start of the year. The U.S. administration policy uncertainty is still going to live. It's still going to be there for the majority of the next 3 years. And if anything, today is the perfect example of that, where you had headlines come out with China, the relationship there deteriorating, and that's clearly taking a hit on the dollar again.
I want to just talk about what you mentioned as the dollar being seen as a safe haven asset, because we're also seeing treasuries really rallying today, people piling in there. How do you kind of compare which one, I guess, signals a weakening outlook for the macro picture? If traders are piling into treasuries versus the dollar, are there any signals we can glean from those moves?
I think that's also like a good debate that people have had. Like, surely the dollar has had a very bad year, but you cannot say the same about treasuries, because you've not seen active signs of anyone dumping U.S. treasuries. In fact, the major holders out there, Japan, EM Asian central banks, while obviously they have been clearly buying gold and amping those reserves up, it's not as if they have deserted treasuries. But the dollar's relationship with treasuries is broken, because while everyone still wants to hold U.S. assets, they don't want to hold U.S. assets unhedged. So they are clearly diversifying away from the dollar, not from U.S. assets per se, but clearly there's a shift away from the dollar, which has made that relationship weaker.
We have to talk about the debasement trade then, because you had mentioned gold when you came in before the show started. It's at a record high. Bitcoin has been rallying.
You went there. You went to Bitcoin.
I mean, all of these other assets, is this a result of people moving away from the dollar losing its appeal?
I think definitely yes. So people have always talked about dollar as a share of reserves collapsing, but that's been true for the last decade. But I think as we entered this year, the marginal collapse in the people holding the dollar has amplified because of all of the uncertainty we're dealing with now. Now, for the last 5 years, most of the uncertainty around the world was housed in the Middle East. Was housed in COVID, which was a supply chain shock, which was also outside the US. I think this is the first time in many, many years where US has become the source and the emanating source of global uncertainty around the world, which is why everyone is now even shyer of holding dollar in their portfolios, which is why a lot of the investors and clients we speak to are now thinking of diversifying away from U.S. assets, not marginally, much less so, because I'm sure there's still not a very strong alternative to U.S. equities, as we can all debate for months on end. But clearly there's alternatives to the U.S. dollar now, where people have shown a greater preference for the euro. And in fact, at times, euro has been behaving like a safe haven and the dollar much less so.
If we're talking gold, we got to talk about what we heard from Ken Griffin earlier this week. Was that this week or last week? I don't even know what day it is.
That was this.
Okay, that was this week. Okay,
yes.
Thank you.
And Ray Dalio as well this week.
Yeah, Ray Dalio as well. You were you at that event too?
I was at the Greenwich Economic Forum.
Okay, so Ray Dalio said that gold is certainly more of a safe haven. Then you had also Ken Griffin essentially say, if he asked if he was agreed with the view of Ken Griffin that gold's rise reflected anxiety about the U.S. currency. How is gold a diversifier now versus where it was maybe just a few years ago? Should people be thinking about the position in our portfolios differently now?
I think gold has clearly been a very topical point of late. And that definitely plays into both the fact that central banks around the world have been diversifying and trying to hold gold assets. So central banks' purchases of the yellow metal have surged in the last year. In fact, that's a trend which has been ongoing for the last 5 years, but it has taken a big amplification up this year. So that is what led to that massive rally in gold. And then a lot of the other investors, like who've mostly been on the sidelines with gold, who've not traditionally seen gold as a safe asset, now with the uncertainty around the world, with people now pitching stable coins, now people talking about holding their debt in Bitcoin as well, with all of that and with greater uncertainty in the US and greater reliance on the US dollar acting as the global reserve currency of the world, there's definitely a bigger shift of investor preference into holding gold both as an investment asset but also as a safety asset. Because whatever happens, at the end of the day, it's a physical metal which you hold in your reserves. Which is not linked to any particular government and their policy, whereas the dollar clearly is linked to the U.S. administration and its policies.
I want to end on, just the headlines that we're seeing today, this idea that perhaps trade tensions are escalating even further now between the U.S. and China. How does that specifically impact your views on G10 FX just within, the next few weeks here?
I would say that depending upon what kind of a picture this evolves into, if the outcomes from here get worse, let's say if Trump comes out and again announces a tariff increase on China close to 150% or even above that, which is what we saw at the start of the year, that's again going to bring back a lot of macro volatility into markets. In fact, FX volatility has been heading lower. I think a lot of FX traders were frustrated with the move we saw in Q3. I think that's going to change. You will bring back a lot more volatility into the markets. I think there will be concerns on both sides. Both countries linked to China and Chinese exports, so euro can take a hit. Chile, the Chilean peso, which is usually linked to the outlook of copper prices, and China will also take a hit. The US dollar will also take a hit at the end of the day. So it will definitely be a lot more volatility and will hurt currencies in that way.
Jayati Bharadwaj, Director of FX Strategy at TD Securities, here in the studio. In the meantime, we're seeing stocks hit a new low as we get into or close to the last hour of trading. The S&P 500 down right now by 2%. When we come back, some stocks that are on the move. This is Bloomberg Businessweek Daily.
Get the latest. This is Bloomberg Businessweek Daily. I'm Emily Graffeo here with Tim Stenovec. Carol Massar is out today. We have a sell-off going on in markets right now. The S&P 500 down 2%. The NASDAQ 100, those technology stocks, down almost 3% right now. And investors piling into Treasury yields with yields falling across the curve. Where are they going, Tim? I guess they're buying a little bit of gold right now as a safe haven, but...
I guess. I mean, I'm looking in the S&P 500 right now, and the only thing being bought in there are consumer staples. Every other group, in every other industry group, is in the red. The information technology down to the tune of more than 3%. Consumer discretionary down 2.8%. Energy down 2.2%. Communication services down 1.8%.
Let's take a look at some stocks on the move today. I'm Emily Graffeo with Tim Stenovec, and we're joined by Bloomberg News cross-asset reporter Denitsa Sikova. Denitsa, did you pick a gainer or a decliner for us first?
I picked a gainer for change because you said all the sectors are in the red, but if you actually look at rare earth materials, we're seeing some of the big gainers, which is not a surprise. MP Materials is the first one I'm looking at. The ticker is MP. Stock is up 13%. Of course, it's coming off all the headlines we're getting from the administration. President Trump threat to jack up tariffs on China over its rare earth control has sent investors rushing into the few companies that have exposure, the few Western companies. MP is actually up more than 400% year to date. Obviously, some of the biggest winners, rare earth producer, the U.S. has already taken a stake in, which we already saw a lot of euphoria for the stock after that. Trump said that the China export controls and monopoly on rare earth is a rather sinister and hostile move. In July, the U.S. Department of Defense agreed to a $400 million equity investment in MP Materials, through which the government will become the company's largest shareholder. The money will help fund a new manufacturing plant for rare earth magnets. So that's definitely a place everyone's been watching. It's been on a relentless rally, and even more today as everything is going down.
424%, a year-to-date gain in MP, ticker MP.
Yeah, it's pretty amazing. USA Rare Earths up 200%. So far this year. I mean, a lot of that happening just really going back to September.
Denitsa and I write about ETFs on the cross-asset team. It's interesting that one of the biggest rare earth ETFs, the VanEck Rare Earth and Strategic Metals ETF, REMX, is only up 80%. And then there's these individual holdings that are up so much bigger. Anyway, what else do you have for us, Denitsa?
Yeah, the winners are concentrated. In information technology tech, we're actually seeing some winners. Applied Digital shares were up as much as 33%, now still about 16%, which as what we're seeing with tech stocks, that's clearly a big gain here. Shares of Applied Digital climbed after the data center developer secured more funding and lease agreements for its projects for bullish hyperscalers, and also it posted better than expected results for the first quarter. So what we saw for the quarter that ended August 31st, Applied Digital reported a loss of 3 cents a share, which is narrower than the 16 cents that investors would expected. So clearly big relief there. And if we zoom out on this one, the stock is up 370% year to date. So that's another massive gain. Obviously, a small company, so these moves make sense. But the AI boom has been intensifying this race, especially for AI infrastructure. And this is one of the clear winners, even on a pretty bad day for the markets.
Okay, I'm pretty impressed that of the 4 stocks you chose, at least 2 of them so far have been gainers today on a day when we're seeing such widespread selling. Let's go to some on the other side of the trade.
Yes, we're done with the good news. Levi Strauss is having a pretty bad day. And this was before the tariff announcement, and it's actually connected with tariffs. It fell as much as 14%. Now it's about 12%. The apparel maker upgraded earnings guidance, but still fell short of higher investor expectation, and they blame it on the tariffs. They raised its full-year outlook, but warned that tariffs are starting to bite. And the problem is, it's really hard to calculate. They say they expect 30% tariffs in China, but increased its expectations to 20% for the rest of the world. And that was before the announcement. Clearly, this is a very volatile environment for retailers. And actually, Levi Strauss was one of the winners. It's still up 25% year to date, but you can see how one headline erases almost half of the gains this year. Beyond Yoga, one of their brands, has actually been performing quite well. Revenue was 1.5 billion in the third quarter, in line with estimates. But still, this is not enough when tariffs are biting.
Okay, we have 20 seconds to talk about some fertilizer.
Yes, another stock that is suffering is Mosaic. Mosaic shares are down about 7%. The fertilizer company said the third quarter phosphate production fell below what management expected. We also have trade war implications here, so that's another stock that has been suffering, but it's still up to date.
Mosaic,
25%.
Ticker MOS. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Once again, a big thank you to Denitsa Sikova. She is from the Bloomberg News cross-asset team. We got a great 2 hours coming up right here on Bloomberg Businessweek Daily. We are squarely focused on the markets on this down day. The S&P 500 down more than 2%. NASDAQ Composite down 2.8%. If you're watching on TV, the close starts now. If you're sticking with us on radio, on YouTube, on Bloomberg Originals, we got a great 2 hours coming up.